Good morning. Welcome to our review of the latest crop report. The USDA numbers came out about 15 minutes ago. We were just reviewing those, and I'll go over the highlights of them. As a matter of fact, we're going to read from the USDA numbers. We'll let you know, as usual, we've got a lot of reaction when these markets are coming out. And let's just start off by saying it's been a negative reaction in cotton. So far, a negative reaction in soybeans, positive reaction in corn, and somewhat of a supportive reaction in the wheat market. I'll just start off right here. In a monthly supply-demand report Tuesday, the Agricultural Department pegged domestic soybean production for the 2015-2016 season at 3.85 billion bushels, 119 million bushels shy of last year's record. Corn output is expected to be 13.63 billion bushels. That's down from last year's record of 14.216 billion bushels. The report marks the government's first estimate for the new crop year and assumes average weather in the crop growing season. Because spring planting season is still underway in the northern hemisphere and remains several months away, in the southern hemisphere, these projections are highly tentative. While U.S. farmers are expected to plant a record 84.6 million soybean acres this year, weather patterns over the summer will determine actual yields. Near record soybean production will bolster U.S. stockpiles at the end of the 2015-2016 season, which begins September 1st. It will bolster it to 500 million bushels, up from 350 billion bushels in 2014-2015. I think the average guess on that was, 400 million. So that's quite a bit over what they had projected. The amount of corn on hand is expected to fall slightly to 1.746 billion bushels at the end of the 2015-2016 from 1.851 billion bushels the prior year. Global soybean stockpiles at the end of 15-16 are expected to rise to 96.22 million metric tons from 85.54 million metric tons. World corn inventories will slide to 191.94 million metric tons in 2015-2016 from the 192.5 million metric tons the prior season. And talking about Brazil, they say the government's estimate for this year's soybean production in Brazil was 97 million metric tons, while corn output is seen at 75 million metric tons. The USDA also estimate wheat output for 2015-16 season. Total U.S. wheat production was pegged at 2.087 billion bushels, up 3% for the prior year. Look at the reaction. When this number came out, the soybean market in July was up 4. Right now, the July soybeans are down 8. November soybeans were up 3.5 at the time, just before it came out. From up 3.5, November soybeans are down 9. So definitely taking a negative way for soybeans. The corn market, just before the report, July corn was 359 down 1. Right now, July corn's up 4. December corn was down 1.5 pennies at 374 just before the report. Right now, December corn is up 3.25 at 378 3/4. Just before the report, wheat was up 6.5 at 488.5. Right now, July wheat is up 3.25 at 484.25. So those are the numbers for grain and oilseed, and also the reactions of the market. Let's go to cotton. The cotton number, the production number was, the U.S. Cotton 2015-16 projections include marginally higher supply and disappearance compared with 2014-2015, resulting in ending stocks and prices on par with the preceding year. The increase in beginning stocks of nearly 2 million bales is mostly offset by an 11% decrease in production due mainly to reduced planting area. Harvested areas and yields are based on historical averages by region, with adjustments to the Southwest to reflect favorable moisture conditions. Domestic meal use is projected higher, while exports are at the prior year's 10.7 million bales. The marketing year average price received by producers is projected to range from 50 to 70 cents per pound. Looking at the world numbers for cotton, U.S. Cotton projections show a decline in global stocks for the first time since 2009-2010. As with the U.S. estimates, higher beginning stocks compared with last season are about offset by sharply lower world production, as most of the world's cotton-producing countries respond to lower prices. World consumption is raised 3.5% due mainly to positive world economic growth and the lagged effect of falling cotton prices during 2014-15. World trade is reduced marginally as the sharp drop of 1.7 million bales in China's imports is mostly offset by increases in other countries. China's lower production and imports combined with a consumption increase of nearly 3% are projected to reduce ending stocks by about 3 million bales, accounting for more than 3/4 of the decline in world stocks. Despite this reduction, world stocks of 106.3 million bales would still be the second highest on record. So that's it. Looking at the reaction, it's not been a good one for cotton. The cotton market in July was down 21 just before the report came out at 65.18. Right now, the July cotton is down 72 at 64.67. December cotton was down 40 just before the report at 64.88. Right now, that market is down 77 at 64.51. But I see that December cotton did get about 40 lower than this at one point. It got to 64.18. It was thought that prices reaching into this area would find support, would see good buying. But with the report coming out, I think people typically pull those orders away, see the reaction of the market, and then decide if they want to start coming back into the market after that. So that's it. Negative report for cotton, negative report for soybeans, positive report for corn, and pretty supportive, maybe a little neutral for wheat. That concludes our meeting. We appreciate you joining us today on this review of the supply and demand report. Thank you.